Unbiased Reveal channel. I'm Peter, and welcome to the deep dive. We cut through the noise, look at the charts, and give you the real signal.
And I'm Jenny. We're coming to you as the U.S. West Coast evening is kicking off October 28th. That means it's, well, early afternoon in the East 8 time zone.
Yep, and the crypto market, it feels like it's wound super tight right now.
Totally.
Okay, quick 30-second rundown. Bitcoin. Massive weekend surge, right up to $115,000. Then, boom, hit a wall, pulled back. And the big players, the whales who kind of kicked this whole thing off, suddenly, radio silence.
Yeah, gone quiet.
It's this weird, tense calm, and it's happening just before two huge events, a major interest rate decision, and that big U.S.-China meeting. The market's basically holding its breath.
Exactly. All eyes are on the Fed, on global politics. Everyone's waiting for, like, the green light for the next move.
And hey, if you want to dig into the sources we're using, the full analysis, remember, we've got the best referral link for you right down there in the description.
Definitely check that out.
So, our plan today, we're going to make this whole high-stakes chess game, fun, humorous, witty, fast. Think of it as telling a story.
Yeah, using analogies, making the techie stuff easy to grab.
Let's start with the immediate drama then. That Bitcoin ceiling, 115K.
Right.
I mean, it was a great surge over the weekend, right?
Yeah.
A solid $5,000 bounce. Looked fantastic.
It did. Strong momentum.
Went straight up, tagged $115,000 and just recoiled instantly. Shows that number isn't just air. There's real selling pressure there.
It's like watching a sprinter just slam into an invisible wall right at the tape.
Exactly.
So, okay, that barrier, it's defined by two really crucial levels right now. Understanding these is key. $115,000 is the immediate wall, the resistance we just hit.
Got it.
But the critical support, and this is for like a healthy, normal pullback, is $112,000.
Okay, 112K.
If we dip, but stay above 112K, the upward push, it's still totally viable. It's just, a normal refuel.
And this is where it gets interesting, connecting the charts to, like, psychology. Why $112,000 specifically?
Well, that number, it's basically the average cost basis for all the short-term holders, the STHs.
Ah, the STHs. Our beloved short-term hypochondriacs, as we sometimes call them.
Yeah. That 112K, it's like the psychological safety net for everyone who jumped in recently.
So if the price breaks below that...
their confidence just vanishes. Poof. Panic selling likely kicks in, and that support could crumble fast.
Okay, but the $115K wall itself, there's a conflict there too, right?
There is a fascinating one. If you zoom in even further, look at the shortest-term holders people holding for just, say, the last week or maybe month.
The really nervous newcomers.
Exactly. Their average cost, it lands precisely at that $115,000 resistance level.
No way. So wait, the immediate wall, the thing stopping the price right now, wasn't built by, like, giant institutions putting up massive sell orders?
Not primarily, it seems.
It was built by people with the shortest attention spans just trying to get their money back.
That's the strong implication.
Yep.
Which gives us our, golden sentence for this bit. The initial resistance at $115K looks a lot like break-even selling.
Huh. Okay, so folks bought high recently, saw it dip, felt the fear, and the second it popped back to their entry, slam. Sell button, just get me out flat.
Pretty much. Market behavior being dictated by the most recent, maybe most anxious entry points.
Okay, interesting.
And this ties into a technical point, too, the SIBO futures market. After that pump, it left behind what's called a gap, basically price zone with no trades, right around $112,000.
Ah, the infamous futures gap.
And history shows, like, over 90% of these daily gaps eventually get filled. No time limit, but they tend to act like magnets.
So the price might get pulled down to 112K just to fill that gap.
It could, but here's the key thing. Because this gap lines up perfectly with that healthy 112K support level we just talked about.
Yeah.
It shouldn't cause panic. If the price does drop to 112K, it's not necessarily a crash signal. It could just be the market doing a very normal technical thing, a healthy pullback, fulfilling that futures requirement.
Okay, but hang on. Let me push back slightly here. If that $115K wall is, as we said, kind of weak, built by nervous break-even sellers,
Right.
and the whales just bought, 4,000 Bitcoin to kickstart this whole rally, why are they letting this flimsy wall hold? Why aren't they pushing through?
That's the million-dollar question right now.
Doesn't their silence suggest maybe they are actually a bit nervous about these big macro events coming up?
It could, or they're just being patient. Which brings us neatly to the silent giants,
Yeah.
the whales.
Yeah, their inactivity is Well, it's loud in its own way, isn't it? It creates that tense poker game vibe.
It really does. I mean, honestly, you start wondering if they just clocked off for the week.
Maybe. So what's the actual data showing? Any movement at all?
It's pretty mixed, honestly. Overall, kind of neutral since the big surge. You got the really big guys, 100-plus BTC holders, and the smallest retail, like 1 BTC or less, showing some minor selling.
Okay, distribution.
But the mid-tier guys, the 10 to 100 BTC holders, they are actually buying a bit, accumulating modestly, maybe 1,600 BTC total.
1,600 BTC. I mean, compared to the move that started this rally, that's peanuts, right? It's like giving back a tiny bit of the recent gains.
Exactly. So the big picture. Since that $9,000 surge happened, there's been no major decisive move from the big money. They lit the fuse.
And now they're just standing back, watching the fireworks, or waiting to see if it fizzles.
Precisely. Watching the clock, watching the macro news.
We really need to remember the context here, that flashback to October 22nd, 23rd. That felt like a real shift.
It absolutely was. We saw that huge ancient whale closing out shorts around 108K. That was significant.
And then, bam, simultaneously, whales scoop up over 4,000 BTC. Biggest buy volume in, 2 weeks?
Yep. Yeah. And that came right before the price spiked $9,000. Cause and effect seem pretty clear there.
So the tension now was that it? Are they done accumulating for now, happy with the pump? Or are they just reloading, waiting for Powell or the summit results to give them the signal to really smash through $115K?
That's the core uncertainty. A real game of chicken, as you said.
Okay, well, Bitcoin's giants are playing statue. What about the number 2? How is Ethereum holding up in all this tension?
Well, ETH is kind of mirroring the stress, actually. It's testing its own critical level, $40.
Okay. After it managed to get back above that big $4,000 psychological number.
Exactly. So holding $40 now is crucial for ETH to keep its own upward momentum going. Sentiment there is fragile, but it has been improving.
And we can actually see some of that improved ETH sentiment in the ETF flows, right?
We can. Bitcoin ETFs, well, they saw pretty ordinary inflows today, about $149 million, which is just over 1,000 BTC. Steady, fine, but not exactly setting the world on fire.
Right. Kind of baseline.
But Ethereum ETFs, that's a more interesting story today. They actually saw a decent positive inflow, $133 million.
Okay, similar dollar amount.
But that translates to over 30,000 ETH. And importantly, it broke a 3-day streak of outflows.
Okay, so reversal there. And 30,000 ETH is proportionally bigger for ETH than 1,000 BTC is for Bitcoin.
Much bigger,
yeah,
relatively speaking. 1,000 BTC is a drop in the ocean for Bitcoin's market cap. But 30,000 ETH, that represents a more significant chunk of institutional flow relative to Ethereum's ecosystem size.
So it suggests maybe some institutions are selectively betting on ETH right now, thinking its recovery might have more legs or be more explosive.
That's one interpretation, yeah. They're placing some bets there while Bitcoin pauses.
Okay, let's shift gears properly now to the big one. The reason the whales are probably sitting on their hands, the reason the STHs are getting nervous at $115K, the macro drama.
Yeah, this week is absolutely pivotal. Risk management is just paramount right now. You've got these two massive dates staring us down.
First up, tomorrow, October 29th, interest rate decision, and maybe more importantly, Powell's press conference afterwards. What he says, the tone. Huge.
Huge. And then, hot on its heels, October 30th, the U.S.-China Leadership Summit. That Chuanjihui, that sets the tone for global risk appetite big time.
This really feels like the starting gun for the next major market phase. And look, if you're holding anything riskier than Bitcoin, if you've got altcoins,
oh yeah,
your fate is pretty much tied directly to what happens in those meetings, isn't it?
Absolutely. Which leads us to the fundamental question. What really drives the altcoin market? People always ask about coins like Cardano, ADA, for example. When will they pump?
And the answer, frustratingly for some maybe, isn't just about Bitcoin dominance or specific project news. It's bigger.
It's global liquidity. Simple as that, really. Altcoins need liquidity to thrive.
We like the analogy. Altcoins are the speedboats. Bitcoin's the giant ocean liner, right? It can plow through choppy seas. But the speedboats, your ADAs, your Solanas, whatever, they need the whole ocean level to be rising. They need that flood of global money, that cheap capital flowing everywhere to really fly.
Exactly. They're higher risk, higher beta plays. They thrive when money is easy and confidence is high.
And that flood, that rapid increase in liquidity, it only really happens under specific conditions from the Fed, right?
Right. You basically need two things. One, the Fed has to completely stop shrinking its balance sheet. That's the quantitative tightening, or QT, the tapering. They have to stop sucking liquidity out.
Okay, stop the drain.
And two, ideally, they need to start cutting interest rates and probably cutting them pretty rapidly. That's what really opens the floodgates for risk assets.
And right now, they're still tapering, still draining liquidity, albeit maybe slower than before.
Correct. The tide is still technically going out.
Yeah.
Slowly, perhaps, but out. Until that reverses, the fundamental environment for a massive, sustained altcoin season just isn't quite there yet.
History backs this up, right? Thinking about ADA again, those crazy explosive runs in 2017, 2021.
Both happened during periods when global liquidity was absolutely surging. The Fed was printing money, rates were low, the conditions were perfect for those speedboats.
It wasn't just ADA's tech or roadmap, it was the macro tide lifting all those boats.
Precisely. And this brings us right back, full circle, to our silent giants, the whales.
Ah, because they know this.
They know this better than anyone. They are the most sensitive to these big liquidity shifts. Why? Because they're positioning now months in advance for when that tide eventually turns, so they can, hype up these altcoins later when the time is right.
So they're not sweating the $115K resistance today nearly as much as they're listening for clues from Powell tomorrow about the liquidity conditions in, say, 3, 6, 12 months.
That's the strategic game they're playing, which is why tracking their long-term accumulation patterns is so much more important than their day-to-day trading. It tells you about their conviction in the macro future.
Gotcha. Okay, that makes a lot of sense. Let's try and pull all this together then, synthesize it for everyone listening.
Okay, so immediate picture. Technicals are a bit tight. We smacked into a relatively weak wall at $115. Seems like mostly short-term profit-taking or break-even selling.
Right. Annoying, but maybe not fundamentally bearish yet.
Exactly. The key floor, the line in the sand for keeping momentum, is $112,000. That level is important because it's the average cost for short-term holders, and it lines up with that SIBO futures gap.
So a dip to 112K is maybe even expected, potentially healthy. Below that, trouble.
That's the zone to watch. Meanwhile, the whales, they kicked off the party, bought big, but now they're playing poker.
Sitting quiet, waiting for the big macro cards to be dealt tomorrow and the day after. Powell's words, the U.S.-China summit outcome.
And the fate of the altcoins, the speedboats, hangs entirely on those outcomes and what they signal about future global liquidity. We are absolutely in the waiting room, anticipating the next big move.
Feels like it. And our golden insight, the one takeaway.
I think it's that the $115K wall, for now, seems built by nervous Nellies with short attention spans, not deep-pocketed institutional bears. That's important context.
Okay, so the big question we leave you with, the thing to chew on. These whales are super quiet right before these huge macro events. Are they genuinely waiting for Powell and the summit to give the final go signal before they push higher?
Or have they already done their main buying? Did they position themselves before all this, and now they're just waiting patiently for retail and momentum traders to catch up and drive the next leg? What do you think?
Something to ponder. Don't forget, we have the best referral link in the description if you want to explore further.
Check it out. And thanks for joining us for this deep dive.
Yeah, thanks everyone. Make sure you subscribe, like this discussion, so you catch our breakdown right after these macro events drop. Welcome to subscribe to my channel and like this podcast so that I can continue to make more podcasts.